Okay. أعوذ بالله من الشيطان الرجيم. بسم الله الرحمن الرحيم. I'm Dr. Adnan Malik, and today I'll be discussing the first chapter of my book, which is insurance. Today, in this discussion, we will try to know the history of insurance. History of insurance. Um, And after reading this chapter, you should be able to understand the concept of insurance, the history of insurance, the functions of insurance, the principles of insurance. For the time being, in this session, we'll be discussing the concept of insurance and its history, while in onward sessions, we will have a discussion on its functions and principles. Takaful is an Islamic alternative to insurance. So, to better understand how Takaful works, it is useful to first explore and understand insurance in terms of how and why it is not considered compliant to the Islamic legal and value system called Sharia, and how Takaful can be an effective alternative within Sharia ambit. So, this chapter focuses on the concept of insurance to provide a base for the phenomenon of the kafir, which is covered in onward chapters. Insurance is a mechanism that enables companies to perform three important functions. First function is to transfer risk of financial loss that is transferred to the insurance company from the person when a person takes insurance. Insurance companies create a common pool and put the money of all the clients, while fewer clients experience a loss, and the company comfortably pays money from the common pool. And for providing this service, the company charge an equitable premium, which is in proportion to the financial risk being transferred to the common pool by the client, and the company decide that equitable premium. So these three important functions, which I mentioned, it create four main benefits for the people and society. People gets peace of mind when they take insurance because they know that somebody is there to pay for their financial loss, control of loss. Insurance companies always try to minimize the extent of loss through advising the client how to take measures to reduce the loss. Then there are social benefits and economic benefits, which we'll be discussing in detail. So, insurance is a well established business practice, and over time, it has developed its core principle in line with which it operates. These principles include, and these principles are the basis of the legal system of insurance in all the countries where it's operating. And these principles include insurable interest, utmost good faith, subrogation, indemnity, and proximate cause. We'll be discussing these principles one by one in onward sessions. So, starting from the concept of insurance, insurance is defined as a risk transfer mechanism in which financial compensation is provided by the insurance company to our client if a defined loss occurs, or we can simply say loss of one shared by many. The loss may be accident of a car, destruction of a factory machinery due to fire, and death of a person. So, coming towards brief history of insurance, modern insurance started in 17th century and it became a common practice to insure ships and cargoes. So, modern insurance started from marine insurance. Today, marine insurance covers all forms of transport, sea, air, road, and rail. However, because of its history, it is still called marine insurance. Uh, then there is fire insurance. Fire insurance is claimed to have begun after the Great Fire of London in 1666, where thousands of churches and houses and government buildings were destroyed. And based on the learning from that fire, the damage of that fire, uh, this unfortunate event compelled people to make arrangement for financial compensation when such incidents happened. So insurance companies started establishing themselves during the same period. This marked the beginning of fire insurance. As time passed, one by one, other dangers began to supplement basic fire coverage or allied perils. These include earthquake, right and strike damage, atmospheric disturbance, which include flood, heavy rain, explosion, aircraft damage, impact damage, burglary. All these coverages added to it. Then motor insurance started after fire insurance when for the first time motor vehicles appeared on the road of England in 1894. At that time, roads were not busy, but there was still a chance of having an accident. Therefore, by 1898, insurance companies had started providing cover to compensate people for losses resulting from accidents involving vehicles. So today, insurance companies mostly provide cover for accidental loss, partial, total, third party, and theft. And then comes the life insurance, and it is claimed that life insurance started from Italy, where people started to form burial societies, which would collect premium from participants and pay the burial expenses out of the premiums collected. And one can imagine that they were poor people who started pooling their money with each other and to pay for their burial expenses. But later on, the insurance became commercialized, and now in many countries, poor can't afford. So that's a little bit of history, and in the onward session, we will be discussing the mechanism of insurance, functions, and principles. So stay in touch and fi aman Allah. Thank you so much.